Good morning, everyone. I am honored today to be moderating today's panel on the GCC public market with an esteemed experts. It is no secret that the past couple of years have been very challenging for the global markets, marked by high inflation rates, accelerating interest rates, volatility in oil prices, and you name it. Today, we're going to be discussing some of the key drivers that, as we progress in 2025, is going to be reshaping the investment landscape. Those key drivers are going to create some opportunities and themes for the market that we think we can capitalize on. First, we're going to be starting with the US and China continuous trade war, which now included Mexico and Canada. From there, we're going to start talking about the GCC market dependence on oil and how it's seeing a turnaround because of the energy transition that's gaining momentum. And because of those major macroeconomics, we will start talking about the GCC mega projects. Those GCC mega projects are going to be very crucial in creating those themes, including this Saudi 2030 and Kuwait's recent initiatives. And as I mentioned, those market drivers are going to create investment opportunities and themes. And we at Kamco, we do believe in thematic investing, as thematic investing is very crucial for aligning the portfolios with long-term mega trends. By long-term mega trends, I mean infrastructure development or change in consumer behavior, instead of just focusing on short-term trends. And that would raise a very, very important question that I think everyone here should be focusing on today. What themes should investors be looking for in 2025? And what sectors are going to benefit from those themes? And finally, we're going to be talking about passive inflows and how it's important for our region and how it accelerated and grew over the year, and where are we expected to reach, and how can active managers like ourselves benefit from it and capitalize on it. With that said, we're going to start with Mr. Iyad. Welcome to the panel. We wanted to ask you how the mentioned key drivers were the transition in energy and the continuous trade war between China and the US, which included other countries as well. How do you think that is going to impact the capital market inflow into the region, and how would it impact the equity market? And let's be more specific about the Saudi market.
Today, I think in general, as discussed maybe in the previous sessions, that the trade conflicts or trade wars have a major impact in the global economy, the trajectory of inflation. Maybe monetary policies might change, and maybe the ease will be less than expected before, which is, I think, is very important for the GCC economies in general, as we are targeting a major growth and major transformation. More importantly, I think the changes in trade flows is very important, and that could lead to disruption in many sectors. Yes, for oil, for example, maybe there will be yet to be seen, but initially, some oil can replace others. So in general, I don't expect a major change. However, tariffs could impact other sectors, such as commodities. With more tariffs, these commodities from major producers might be shifted toward different economies and impact local producers. And I think this is a major challenge. For example, in Saudi, there's a big focus on localization. Whether from big corporates like Aramco, for example, they have Iktifa program, or Al-Muhtawa Al-Mahalli program. So this is basically the government is trying to enable the local producers to have some part of the development of the economy. Now, with tariffs, maybe the cheap products or some products that are coming from China or any other major producer will need to find a place to be sold. And that will be targeting maybe some GCC countries and could harm local producers. And that really is not, will be, yes, maybe some projects will be faster, but will not lead to the overall improvement in the economy.
Structural
Yes. might be some structural shifts. Yeah, in some energy, as I mentioned, in oil, maybe the impact will be minimal. Petrochemicals, which is a major sector for the GCC in general and for Saudis, like almost 30% of the Saudi market. Also, it is already suffering from major challenges globally, coming from excess supply. Now with this, the recovery of the sector could be even more or prolonged for a longer period of time. So maybe the recovery will be later, more than maybe after 26 or 27.
More of a midterm, let's say, impact. Midterm to long term.
Yes.
And what about you, Mr. Thomas? Are you in line with Mr. Iyad? And how do you see that with the other countries in the region?
Specific. For the GCC in specific, it's mostly second-order effects of, let's say, elevated tariffs impacting interest rates, and also supply chain bottlenecks in our view, which we already do see in some of the public listed equities from the region pricing in those risk premiums in some sense. So everything that's evolving from the US and China and even Mexico, Canada, and even what's transpired with Europe, we do see equities in this region pricing in some of those risk premiums. Having said that, we are really constructive on trade infrastructure plays, and I think the previous panel talked about how the region could be a facilitator of trade between the East and the West. Yeah. We're also seeing the Middle East being a key facilitator in what the world is calling Global South, which constitutes 30% of global trade and growing, and also over 60% of the population. And if you look at all of these trade infrastructure plays like ports, you see a doubling down of capacity, whether it's Sheikh Khalifa Port and Jebel Ali Port in the UAE, whether it's the ports in Saudi Arabia, and even in Kuwait. If you look at Mubarak al-Kabir Port, it's supposed to be, and it's touted to be, a key beneficiary in the Road and Belt Initiative with China. So this space will definitely do well, and we are constructive on this. And we do see energy transition as an active topic in the GCC as well. And I think there are two dominant themes there. One is obviously the gas expansion theme that you're seeing right across the region. And it starts with Qatar, obviously, who's almost doubling their capacity from 77 million tons per annum in gas expansion to 142 million tons per annum. And even if you look at Jafurah in Saudi Arabia, and if you look at other regions as well, you see the growth in non-associate gas in Kuwait. You do see that themes in energy sort of playing out in terms of energy transition. Also, if you look at the other dominant theme in energy transition, it's the higher mix of renewable and gas in power utilities or power generation. And that's something which is playing out as well. Saudi has mentioned that they want 50% of their power generation to come from renewables and 50% from gas, phasing out oil completely from power generation. Also, you've found, and it's been mentioned in the previous panel, DEVA has similar targets by 2030 as well. Qatar recently, last year, mentioned that they want to bring renewable energy to 4 gigawatt, most of which will be in the solar photovoltaic space as well. So there's enough to say that the GCC is not evading this energy transition boom, but is very much active in this transition, that the global transition that is underway. And obviously, but they're playing it to their strengths as well.
Very interesting, thank you. And Mr. Raman, since you have the privilege working with MSCI, and you've, of course, definitely been talking to global investors, how are you seeing the global investors thinking of the GCC country, and how is that impacting their capital inflow into the region?
Thank you, Dashti. Thank you, Kamco, for inviting me here. So on the trade, I think this year, technology and trade will be one of the biggest themes which will play out. And if you think about just the trade, we take a different view of understanding the trade impact on the equity market. Taking just the economic exposure, broadly, you can look at many sectors get impacted, but just taking the corporate revenue, one way of looking at it is to just look at the corporate revenue. And if you look at the MSCI All Country World Benchmark, about 20% of that revenue, of corporate revenue, will be exposed to some sort of a tariff impact this year. And 10% of that is basically tariff which US will put on any trade which is happening into the US market. And another 10% is on the counter tariffs which other countries will put in. Now, fortunately, not much of corporate revenue is exposed to GCC both ways. And one symbolic advantage of that is that, as Thomas and previous speakers was talking about, this region is very poised for non-oil energy growth reforms which is taking place. And if that's the case, then a lot of imports which China sends out to US and the West on energy equipment can be renegotiated. So that's one major advantage. Second is that US export a lot of agriculture goods to China, soy and corn and everything. That's another area where food security is required for this region. You can start renegotiating that one also. So I'll say that this region, especially GCC, can have, because of its total neutrality related to both the West and the East, it's in a very unique position to take advantage of what's playing out, especially between US and the rest of the world, especially on China, and come to some sort of a advantageous position, especially on the corporate revenue side.
Yeah, and I think that's why the GCC have been trying to take so many initiatives to create those projects. So moving to the mega projects and including Saudi 2030, Mr. Iyad, what do you think, how can Saudi actually capitalize on those mega projects to create investment opportunities in Saudi?
I think mega projects and building on it, the mega events, including World Cup, Expo, the Asian Games and Winter Games, all of these projects will be coming in the next 10 years. And that will require major investments in infrastructure and in other facilities to be successful in meeting the requirements and to host a proper or good events. The good thing is that we see a lot of appetite from investors, specifically international investors, to looking to how we can benefit or have access to these kind of projects. As of now, the percentage of QFIs or QFI'd foreign investors to the total volumes in the Saudi market reach almost 30%. Maybe 7 years ago, we were 5% only. So there's
That's a good increase.
Yes, a major growth. And the level of depth or level of knowledge required and the level of questions looking and searching for opportunities is quite high by these investors, which is very good. I believe that these investors are looking for what they call capex of these projects. So, for example, mega projects, they're looking for which companies are able to provide steel or cement, etc. Or they're building on other transformation initiatives, whether in energy, electricity, digitalization, and they're trying to find opportunities there. That is also driving a momentum in IPOs. The Saudi market has been very active in IPOs, and the beauty is every year we see completely new sectors. And the oversubscription by institutional investors is increasing a lot. And there's a very strong demand by international investors. I think that is working together, and I think we will see more of that in the future.
Definitely. And Thomas, what about the rest of the region? How do you view the mega projects impacting the markets here?
Yeah, so if you look at project activity in general and the momentum that the region is witnessing, including the mega and giga projects, I think what's clear is you find national champions sort of emerging from different spaces, and I think Iyad alluded to that as well, in power, water, construction materials, EPC contracting for that matter, and this is a trend which will probably also seep into the other countries who are seeing increases in project activity. And I think quietly under the radar, we've seen Kuwait close 2024 with a 60% jump in project activity to $9.2 billion. And if everything that we read in the newspapers and all the public releases from the finance ministry is to go by, we do think that this number could go up significantly, even double in our view. So what happens to public listed equities is typically what happens is utilization rates of companies that facilitate as national champions go up. You find order books swell and several fold, in fact. And then you find medium-term earnings visibility increasing, prior to which you find valuation re-rating happening for these companies. And eventually you do find category leaders getting repriced in the market, and then it moves from category leaders to niche players as well. So, and eventually you will see IPOs also emerging from companies. So Kuwait is poised for that sort of growth in our view.
And Mr. Raman, how do mega projects influence global investment inflow into the region, given those mega projects?
I think one way to think about is that you require money to implement those mega projects.
Yeah.
And if your government coffers are impacted by what's happening in the oil industry, oil prices, then you have to tap into the market, equity market or public debt market. Now, we saw that happening with Aramco. They are, offloaded a bunch of shares to, increase the float. If that continues, it advantages for twofold. One is the public equity markets here in the region, float will increase, liquidity will increase. That means that more investors will come, both local and international. But ultimately, the weight of the region also increases in the global benchmark.
Right.
That will also attract more capital. So that way, it's all good. Mega project has its own thing that, but then fiscal discipline is required. If you have to implement this thing, you can raise the capital, and if you're not spending properly, then it can have other severe impact. But overall, I think the mega projects' initial phase of funding was done by the government. But now, I think they have to tap into the public equity market.
Well, that takes us to my favorite topic, thematic investing. And we've worked on that before, me and you. So what themes are attracting global investors, and how is that reflected into this region? Do they look at the region as a sector, or example, a theme, or do they evaluate it on a country weight?
Way to think about mega trends or global themes which are playing out. And if you can look at 4 broader themes which plays out globally. And these are themes which are, we call it mega trends in nature. They are not short term. The first is on technology, transformative technologies. The second is environmental resources, which is the growth to renewables, energy efficiency. Third is society and lifestyle. And the final one, big theme, is around health and healthcare. Now, if you take all the 4 themes are playing out in the region, and in terms of public equity market, you don't find too much of exposure directly. Most of them is happening broadly in the society, but in the exposure-wise, not many companies are there which are exposed to the things. Maybe if you look at about 200 companies which are in the MSCI, GCC, IMI index, about only 40 of those will be exposed to some sort of a theme. But even then, you can find some of the champions within the thing, and you have to go and look for them. I think if you broadly think about the themes, one is on the society and lifestyle, as the urbanization is taking place, more youth are coming to society, we can see that more companies will come via IPO to support the theme. Same thing on health and healthcare, because as the aging population is going to take place globally, other companies will come into, and we saw IPOs come into the market to tap into that.
And just like we mentioned earlier, the mega projects are creating some structural shift in the market. So Iyad, what do you think investors here in the room should be focusing on? What theme they should be focusing on for 2025, and what sectors in Saudi you think is going to benefit because of those mega projects and macroeconomic shifts?
First of all, maybe in general, as GCC countries, I think within emerging markets, we have a very favorable positioning. Valuations are good, currency risk is limited, and we have a very good story, major transformation, which is basically ticking all the boxes for these kind of investors. Zooming in to Saudi, I think the main theme for this year onwards, for the next at least 5 years, is Saudi hosting the world, driven by the 4 events that I mentioned earlier, which requires a lot of investments in infrastructure. So infrastructure is a key theme that is needed with all the supporting sectors with it, whether human capital, whether banking, with materials, all these sectors together. Moreover, part of Vision 2030, diversification of the economy is important. And now we are seeing an increasing focus on new sectors, mainly within logistics, within also tourism. And as you can see, the activities.
Which we didn't have earlier, right? We didn't have tourism being played in the region before
Exactly.
until these projects happened.
Yes, and that it already started, and it will accelerate, I think, more and more with the completion of such projects and with the happening or occurrence of the new events.
And what about you, Thomas? What do you think for the rest of the region? What themes they should be playing? What sectors to look for?
So I think we talked about industrials and trade infrastructure plays. We also talked about how utilities are transforming themselves into more growth / even value plays. So they fit both buckets as well. Just to give you some context in terms of numbers, the combined weight of utilities and industrials in the MSCI GCC is 5.4%. And if you compare that with, let's say, the larger EMs, where it's double of that. So it really is a good ground for active stock picking in the region. So that's one theme that can be easily exploited by active investors into the region. And if you look at, let's say, like a bellwether real estate sector, there's still enough themes to play. You could still play late cycle out of the UAE and Dubai in specific. You could probably look at the potential real estate developer beneficiaries from the foreign ownership law getting enacted in Saudi Arabia. And even in Kuwait, probably you can indirectly play the much anticipated mortgage law through the banks. We did some back of the envelope calculation. For every 10,000 loans which get added to the banking sector, the aggregate loan book grows by 2.7%. And even beyond these common themes, you find that there are enough diversification options, like platform plays have come into the market over the last 2 years, whether it's fintech, F&B, and even consumer discretionary. If you have a medium-term view, even out of Saudi, the healthcare sector looks interesting, with the entire fee-based system transitioning into the DRG or the diagnostic related groups and the complexities which come with that. So there are winners there as well. All in all, there's enough to pick for active investors from the region, and it should be part of global allocation going forward in our view.
And everyone is excited about passive inflows. I mean, a lot of people spoke to me before this panel, and they were very excited to talk to you about it. So if we want to think about passive inflow into the region, it's actually huge for us, right? It brought so many inflows since we were included in the emerging market. However, because of the macroeconomics that we discussed earlier, the high inflation and the volatility in oil prices and so on, we estimated that currently the GCC weight in the benchmark is underweight by 4%. Today we stand at around maybe 3%. However, with the mega projects and with the transformation in the economy, we expect some inflows into the market, which is going to be huge. I mean, taking the underweight from 4% to equal weight, that's going to be a lot of money coming in, right? And we've seen some of the markets taking initiatives. So, for example, a couple of weeks ago, Saudi Arabia announced the foreign investment in Mecca and Medina. It is estimated that's going to bring around $600 million in May, and that's only from MSCI trackers. And the other catalyst for Saudi people can talk about is if they increase the FOL from 49% to 100%, that's going to bring another $9 billion into the market. And the same thing goes to Kuwait, for example. It's, the tracking now is 3.5, so let's assume they actually increase their FOL. That's going to maybe double, correct me if I'm wrong. So with all those macroeconomic shifts and the mega projects, how are you seeing the foreign investors shifting their capital inflow to the region? Are they thinking of it maybe like a safe haven because of what's happening with the tariffs and so on?
So let's put in some number to context. When the first two GCC countries came into MSCI benchmark in 2014, the combined weight for them in the all-country world index was about 20 basis points or so. And within emerging market, it was 1.5%. Today, within ACFI benchmark, the weight is about 70 basis points, so it's 3 times where it started. But more importantly, if you look at the emerging market, the weight is close to 7%. So it's a 5-fold increase. And now the one other way to think about is that we are seeing a bit of a shift in the way people allocate to China versus the rest of the emerging market. In that context, the weight of GCC in a EM ex-China benchmark is close to 10% or so. So why those numbers are important? About roughly $16.5 trillion is benchmarked MSCI indexes, I'll say across all different regions and the global benchmarks like ACWI. Now, if you take that number and just look at the passive impact on GCC region, that's close to about $30 billion of passive, $30 billion of passive investment. And about 110 billion is active. That's exposure-wise, because many of the active managers are not fully at a neutral weight to GCC weight. GCC is about 7%, so they're not at 7% weight. So probably, as you said, they are underweight by 4% or so, 3.5% is the kind of a median weight or average weight you think about. So if I take the GCC weight from an active perspective and say I want to be neutral because of the growth prospects and the neutrality of the region, then you're thinking about the exposure or the flow-wise can go from a $50 billion to $110 billion. That's a neutral weight. So that is the prospects for the region, but then other things plays out, isn't it, in terms of what's going to happen. The bigger thing which is playing out is the move towards climate investing or ESG investing. Today, roughly about $1 trillion of the benchmark MSCI is exposed to climate benchmarks or climate or ESG benchmark. There, the weight of GCC is less than the 7%. It's close to about 5.5%. So they are underweight by 2% out there. So I think if the reforms which are taking place continue, you may see more active managers taking a positive view on the region. That itself is creating impact on the flows coming in. The second big thing will be the performance and the valuation increase, which is we have seen happening. GCC have outperformed EM benchmark by roughly on an annualized basis about 200 basis points for the last decade. If that continues, the weight will increase and then the passive flows will increase in the region.
I want to add a few things. When we're looking at emerging markets, in comparison, you mentioned ESG. So I think in general, GCC, in terms of ESG, is, I think maybe the environment part, maybe it's a debate. But in terms of governance, I think we are much higher than most of emerging markets. In terms of liquidity, I think all the markets are moving in the right direction. The average trading volume in Saudi have increased substantially, driven by these mega projects and how investors are reacting to the opportunities in the market. So I think that the regulations, as you mentioned, Mecca and Medina, the restriction, that will attract a lot of investors to different set of opportunities. So I think that maybe with time, there will be more interest and maybe the weight could increase even faster within the region.
And because we don't have enough time, but I have my favorite 2 questions that usually I like to end all my sessions. If you would tell the investors today in the room what trend or what factor they should be focusing on in the coming 12 to 18 months, Thomas, we'll start with you.
I think it's clearly going to be trajectory of interest rates and its impact on how companies are able to deleverage.
Okay.
And the second one is also going to be how CapEx translates into revenues, and how soon companies can sort of establish scale in their own niches.
Okay, and Iyad?
For me, I will focus on Saudi. I think Saudi hosting the world is a major theme that will keep playing in the next 2 years and will be a major driver for the market.
Raman?
As a technology and trade, for those kindergarten who are learning coding in China, it's a waste of time.
Okay. Okay, perfect.
Thank you.
My last question to you guys. In the coming couple of months, Is there any event or a trend that investors should be looking for?
Probably I'll go first.
Thomas, you
I
wanna
think
start?
supply chain bottlenecks, the oil market balance for the region is going to be key for the region. And I think within the whole transformation theme, I think these are tenets which really need to balance out. And if it stays the way it is, there is significant progression from here for the region.
Iyad?
I agree. Supply chain and inflation, how the trade war
That's
will...
the hot topic now, yeah?
Exactly.
And Raman?
Hope AI doesn't take my job away.
I hope not. We still need you here. Thank you so much, everyone, and thank you to our panelists. We wish you a successful 2025 as the GCC unfold its investment opportunities. And I wish you, and I hope you enjoy the rest of this conference. Thank you.